Good morning, I'm Chris Beach and welcome to Charting the Markets on IG Live. And it's turning into a bit of a risk-off morning once again. Overnight, we had some Chinese trade data, which was much worse than expected. Imports and exports were down across the board. We would expected to see them fall, but they fell by much more than expected. So casting quite a gloomy tone over markets, really, this morning, particularly as we'll see in a minute for the FTSE with its close links to China, with some worries about commodity stocks really coming into play after Glencore's numbers this morning there. It looked like we might be seeing some signs of recovery in risk appetite, but it's only with the dollar back on the front foot. That has proven to be a bit tricky for a lot of currency pairs. And in commodity markets, as I say, Glencore's numbers this morning really casting a pall over that asset class and causing losses for a number of those too. So for the start of the day, after what was a fairly quiet session yesterday, and indeed showed signs of a recovery in risk appetite, particularly in the US, there is looks like a bit of a return to the bearish form of last week in early trading across global markets this morning. Starting with the indices, beginning with as ever with the FTSE 100, currently trading down at 75.14. It's beginning to show quite a bit of losses here after closing back above the 50-day moving average yesterday, with signs perhaps that it had stemmed the selling after the volatility of Thursday or Friday. Of course, the Bank of England meeting really hitting the FTSE 100. We're back to moving lower again. So we're back almost to the lows, not far off the lows of yesterday's session, really. Which shows you how still the urge to sell. Of course, we are in August, which you could argue can cause some exaggerated moves. It's never a great month for markets, really, August. Certainly doesn't have that great mood to it. And I think with the Chinese data this morning showing that decline in global trade, really putting the cat amongst the pigeons there in terms of worries for investors. So the fact if we get a reversal today and if it closes back below the 50-day, that could really shift the advantage in the short term to the sellers, could negate this bullish crossover we had on stochastics. So the fact that you're having stochastics rolling over again with the price below the 50-day and below the 200-day does sort of lend a fairly negative tone to the FTSE 100. What has become increasingly clear is that the uptrend of the first, it was barely the first 2 months of the year really, has now firmly come to an end, and we're having a lot of pressure. What we saw here, that breakout, we had the 7,700 by the end of July really just fizzling out and things turning negative once again. Flipping over to the DAX this morning and not really taking much comfort either from that Chinese data, if anything, taking more of a loss and completely wiping out yesterday's recovery. Yesterday, we had the index close above Friday's highs. It was back above the 100-day moving average. It looked like we might be seeing something of a short-term bottom being put into place and maybe another bounce back to those recent highs. That, with this morning's data, has proven to be incorrect. As ever, the price has changed our view, changed what we should be thinking for this point onwards. And if this maintains into the US session, if the negative trend continues, then we're looking once again at another test of this 15,700 level and another move down potentially towards 15,500. So that's, again, casting a bit of a pall over the whole index and suggesting that this consolidation has further to go. And of course, it is remarkable how the DAX, having rebounded into the beginning of the year and then continued onwards to April with some record highs, has really struggled since then. It finds itself roughly around the level it was in the middle of April. So really not showing much upside. If you compare that with something like the NASDAQ, which has rallied and rallied, the DAX has really seen the forward momentum disappear. Admittedly, it's not fallen. I think that's key here. We don't just see markets going up or down, they go up and down, and this is exactly what you've got with the DAX here. It's just going sideways at this point, with the sellers doing their best to try and hold it back, or the buyers not finding enough momentum to drive it higher. For whatever reason, for whatever motivation, it's just how the price action is reacting. And with the price reversing course today, this 1% loss so far, we're now looking at this once again back to an old friend, 15,700, which was big support during April. It was resistance back in March, so it is an important area to watch. We briefly dropped below it in July, but it was for all of 2 days, 3 days rather. So if that goes, then 15,500 or so is the next area to watch for. And then from there, the 200-day moving average. And in some ways, it might not be a bad thing for the uptrend to finally resolve into some kind of pullback, just to create that kind of negative sentiment that is essential for any kind of rebound. Because if you think back to March, when you had the banking crisis, credit squeeze, etc., there was plenty of bearish sentiment, which said, oh, the move from the October lows has finally hit a wall and now will unwind and go back down again. So it provided the kind of conditions for a rebound just when people least expected. We've not really had that in the DAX. It's consolidated since April. It hasn't dropped. And so I think maybe August and September gives you the perfect time, if nothing else, and that China data maybe gives you that catalyst for a pullback, even towards the 200-day moving average, before then establishing a proper higher low for a move higher. Potentially, that's the potential way it might work out. That's just one possible view at this point. But certainly the sellers hold sway in this index as well this morning. Moving over to the US, the Dow is slightly less affected. Had a bit of a good day yesterday, and really, again, thoughts of maybe it's finally beginning to move higher on a more sustained basis again after consolidation. Of course, we're still very close to these highs, which is the highest level for this index since, gosh, we have to zoom out now, all the way back into February of last year. So quite a big recovery here for this index. So just a bit of volatility creeping in, bit of weakness after yesterday's big up day. For the more bearish view in the short term to emerge. And again, it would be a pullback within what is now becoming an uptrend. If it dropped back even towards, I think, maybe the 50-day, that takes us down 2.5%, 3%, about 1,000 points. That might cause enough concerns to really drive, to really see some, to cause that pullback, to cause a bit of worry about where the market goes from here, but would leave the uptrend intact. And crucially, if it bounced off the 50-day moving average, would kind of validate the move we've had since the beginning of June. And that, I think, is what we're watching here, that the sellers beginning to grasp this index in a way that they certainly seem to have done with Europe this morning. So if it spreads to the US, if it gets worse, back below 35,000, maybe we have a bit more of a pullback on our hands. Alternately, we're looking for that rebound back above 35,500 to suggest that the buyers are in charge once again. So something to watch in the coming days. The US CPI, of course, is the big thing to watch this Thursday. So that's probably what's going to drive markets in the short term. So a little while to wait, of course, for that. Looking at FX markets, and the rebound in euro dollar has hit a bit of a wall too, dropping back from 110, as you can see on the chart here. We had 3 days of recovery really from Thursday's low. It then starts to move high and seemed to be going well in Monday's session actually, but we couldn't get back to Friday's highs, so that was a bit of a worry. And then today we've had the reversal. So it's the China data which is just giving everyone an excuse to move into risk off mode. So I think we were saying earlier last week, indeed maybe even yesterday, about how markets go down in pullbacks. It has to go down, stop going down, then start to go back up again. At the moment, it's probably still in the consolidation phase around the lows. If it goes back below 109, 109.20, then obviously we can say this pullback has further to run. We're looking down towards perhaps 108.30 and those June lows, or even down to the 200-day as the next downside target. At the moment, maybe it's just pausing after this downward move. And for it to move into the third phase, if you like, obviously we'd need probably close above 110.50 to say, okay, we're back on the up again. And it looks like we've established a low, moving higher in the direction of 112.75. As I say, and this will apply ad nauseam this week, it's US CPI that everyone's waiting for, which will be the driver for the dollar and therefore for almost everything else. Similar tone here for the pound. Bit of a bounce yesterday, taking the pound back above the 50-day moving average versus the US dollar, firmly up off the lows from Thursday after that BOE meeting. But it's not seeing that follow through. We're not seeing that sustained recovery. We want to see, obviously, another up day for the buyers to argue for a move of 128, that might then clear the way for a move back to 131. And from there, it's obviously digesting a few gains from Thursday's low. So there's still hope that maybe it might recover. But if it does then drop back below 126.70, we've got to worry a bit more that this pullback has further to run. And it's not going to continue higher. Essentially, that's all we're waiting for, is the price to tell us what to think next. At the moment, it probably falls into the neutral category. You might still argue that it could be a higher low here, because obviously that trend is still firmly intact. We've seen sustained action below the 50-day before. If you look back to May and into June, that happened as well. You had a bit of a pullback. Indeed, a bit of a stunted recovery before it really moved to the upside. So maybe that's what we'll see here. But at the moment, it's just digesting some of those gains. Finally, dollar yen, dollar strength here really. And this is interesting because, of course, with our China data again this morning, as far as the Japanese economy is closely linked to China might be hit. We're getting some yen weakness here, which follows on from yesterday, really, from some hints from members of the Bank of Japan's governing committee the change they made to their monetary policy last month, which was a bit confusing in and of itself, was probably just a modest change and not really a big move towards hawkish policy. So that's weakened the yen, given the dollar a lift. This was our trade of the week, actually above 143. So it's interesting to watch this back at 143 this morning. If you get another positive day today, that would kind of solidify the view that this has started another leg higher, and we could be seeing a move back towards 145 and those highs from the beginning of July. It would need a move back below 141 to negate that view, I think, in the medium term. And turning to commodity markets, which have really not been given much joy this morning. Those figures out of China, again, it's just inescapable. The trade data really just hitting everything this morning. Gold doing its best for yet another day. I think it's the fourth day in a row now, maybe the fifth day, to hold 1930. And if it continues to hold that, there's still yet hope that maybe it will try for another bounce and it will unwind this move from the July highs. And it might put a move back to 1980 and 2000 into view. As long as it holds 1930 or so, then maybe we can argue for a positive move higher. Otherwise, back below that daily close below 1930, that takes us back down towards 1900, which were these lows, around about these lows of early July, really. And that coincides nicely with that rising 200-day moving average. So certainly the bullish view we thought was developing in mid-July has really taken a knock, and there have been a couple of false storms since. It hasn't yet tipped into outright bearishness, I think, but it could well be heading away. But we need that daily close below 1930 to get that kind of trigger, I think. And then finally, crude oil, finally getting a bit more weakness in here after this big move higher. Hardly surprising, really, if you think about it, after rallying from the June low down at 67.30, back at $80 a barrel now. Decent recovery there for crude oil. A modest 24% gain, really. Consolidation is probably now the order of the day, I should expect. Concerns again about China and the economy there really hitting crude oil prices. You can see that's arguably a bullish sign and could see the price continue to move higher from there over the medium term. Maybe it moved back into the middle of the month and onwards from there. And then the next target to the upside really becomes 83.40, those highs from the end of April. And beyond that, we're into territory we've not seen since November, December of last year. So quite a big step change there in crude oil. So long as it stays above the 200-day and above 77, it's really hard to muster a view that's too bearish in the medium term here. So looking at the rest of the day, not much on the calendar. Certainly we've got some earnings later on today, but it's very much another quiet session for US markets, which leaves the main news being that China data overnight, and then the focus on A, China's inflation figures tomorrow morning, and then B, US CPI, the big event of the week on Thursday afternoon around 1:30. At the moment, we're expecting the Dow to open around about 100 points lower from yesterday's close, down around 35,314. So weak open expected for US indices to mirror that slightly miserable morning in European markets. That's it for me. Thank you for joining us, and we will see you again tomorrow at 10:30.